Thanks very much, Paul, and thanks very much for hanging around for the last session. That's our open pit up at Gilby's, Dalgaranga. We're situated in West Australia, not too far from Mount Magnet, a fairly well-known gold region. I came into the company through the acquisition of Firefly Resources and was appointed in November last year, and since then embarked on a fairly direct approach. My strategic focus is pretty much, I'm not going to read it out, but basically we're very focused on what we're doing. We're maximising what we have, we're optimising the grade, and we plan to grow. We have a very active board. It's a small board. I'm pretty keen on having active board members and only people who contribute. So the 4 people that are listed there are very active, also very, I suppose, a diverse board, so from different backgrounds. One thing I will point out there, 110 mil market cap, 30 mil cash in the bank, 80 mil EV, producing gold, making cash. That's our operation. As Paul said, fully paid for, debt-free and unhedged. We have a number of different projects. I'm going to focus primarily on Dalgaranga. That is our focus as a business. We have other assets, but we're looking to, we've got them in strategic review basically. We're looking to maximise the value from them. So again, I'll go through focus, optimise, maximise, grow. That's what we want to do. Our people, a lot of people talk about the value of people. It was one of the biggest challenges for me coming into the company, being acquired and then becoming the managing director of the acquirer, was to make sure that I held on to those people that had been there, some of them since before administration. So there was a lot of IP and a lot of knowledge within that company. So had a lot of focus on that. Obviously, safety is the key aspect. We want people to go home every day. We want them to come to work and be happy to come to work. So we focused a lot on making sure that everybody understood that we were going to operate in a safe manner. We were going to focus on the people within the business, retaining them and giving them a good salary to go home with, and make sure that we look after the environment. Production and costs. So during March we had a record quarter for the company. Since administration they've sort of struggled along. We had pretty serious focus from day one since we started. Well, since I started in November, we delivered a record quarter, just short of 22,000 ounces for the March quarter. We put $10 million in the bank, which was free cash flow after costs. So we're pretty happy about that. We were one of the sector-leading gold producers in that quarter. I'll just draw your attention to the cost slide there. It's obviously been spoken about a fair bit. Everybody knows costs are going up. $12 lettuces is obviously a good indication that things are accelerating in cost at the moment. Our consumables that we use at site to produce our gold bars are going up as well, and our cost of personnel also. That's where the assets are located. We have a number of different gold producers around us. We also have stranded assets around us. One of our key focuses is obviously to focus on our operation and generate cash flow, but we want to be able to offer a service to the people around us. Every mill around us is constrained by their capacity. We're not, and if we wanted to be able to bring in some dirt to our plant, we could offer that service to the region. But at this point in time, we're looking to be standalone. So we think we offer a point of difference to the guys around us. That processing plant was commissioned in 2018, so it's only 4 years old. It's in amazing condition. When I took over, you could tell that there was a lot of pride put into that plant. It's a very efficient plant, very low processing cost. $14 a tonne is sector leading, so we're pretty proud of that. Within, I suppose, a month of starting, I sat the geology team down and I said, look, we will maintain sustainable production with consistency, but what I want to see is what ideas do you guys have to grow this operation from a solid foundation that we've established. What do you guys want to drill? So we came up with a list. The first thing we drilled was Gilby's North, which was immediately north of the pit, and we made a discovery. So that's now 350 metres plus in strike extent. It's very similar material to what we're currently mining, but it is appreciably higher grade. So we're quite excited about that. We're looking to grow that. We've got 2 rigs on that at the moment, so we're going to keep pushing that one along. Plymouth, which is a currently operating pit. We drilled underneath that. That was designed to 80 metres deep. We're still hitting mineralisation underneath it, so we're going to extend that to depth. And I suppose more recently we drilled the Gilbey's footwall, which was immediately into the side of the eastern side of the pit at Gilbey's. We deferred a cutback because of the cost at the time. My intention was to drill that and make sure that there was gold ounces there to be able to create revenue and justify that cutback. So we're looking at the economics of that at the moment, but we hit multiple loads. Everything we drilled was over 0.5 gram. Tens of metres of mineralisation there. 5 metres at 38 was our standout hit there, and we only drilled a few holes, so we are following that up. And I suppose another point of difference, we are a gold producer that is aggressively exploring, and we're aggressively exploring within 4 kilometres of our plant, which is, and we're having success. So it's kind of an unusual situation, but very positive. The Yelgoo asset, which I came into the company through Firefly, that sits within our mine schedule at the moment, but we're quite happy to keep putting ounces in front of us, 110 metres away rather than 110 kilometres away. So we're going to build a mine schedule that obviously includes Yelgoo, but we're going to keep putting ounces into that mill a lot closer. And as I said, regional processing options there. All right, that's just an overview there, plan view of what you're looking at. As I said, it's debt-free and unhedged. So we are right within the mine footprint there. We're right within our infrastructure corridor. Luckily, the engineers didn't put too many waste dumps in the way. We made that discovery at the northern end there, and we don't know where it goes to at the moment, but we're still drilling the same stratigraphy. It looks like it's open to the northwest. We know that there is a deposit 4 kilometres away. Obviously, we're hopeful that it's mineralised for the whole extent, but we'll inform the market as we go there, but it looks very promising. There's Plymouth, Gilbey's footwall, all within 1,000 metres of that plant, 2.5 million tonne per annum plant. We run it anywhere between 2.5 and 2.7 million tonnes at a $14 a tonne cost, so very efficient, right next to these deposits. All on granted mining leases as well. That's the other exciting thing. This is our discovery we made at Gilbey's North. You can see some pretty extensive hits there, some of them from near surface. The deposit is essentially mineralised from surface, and as I said, it looks very similar to the stuff we're mining in the main pit at the moment. So we're we're pretty excited about the prospect of being able to create a new extension to our main pit and an extension to our life of mine, which is our overall goal. That's a cross-section there. You can see I'm pretty excited about it. We drilled the right-hand lode there. We were pretty excited about that. And as we stepped back to get deeper on that main lode, we actually hit a thicker lode, which is much higher grade and much more, I suppose, voluminous. That's pretty exciting because obviously with a 2.5 million tonne per annum plant, you need a lot of volume. It essentially chases you, so you need to keep putting dirt in front of it. And being able to do that, 140 metres away from our existing plant, right on the haul road for the existing pit is pretty unique. We're drilling that out to indicated status, down to about 50 metres as quickly as possible. We've submitted a mining proposal there to the Department of Mines. It is an extension to an existing mining proposal, so we see a very smooth path to production. That's Plymouth. As I said, it's an operating pit at the moment. You can see the design outline there, and we're still hitting grade underneath it. Just recently, 5 metres at 4 grams from 97. So we can definitely extend that pit to depth. We're obviously working on the economics, but it's pretty exciting that we're still being able to extend that to depth. And again, within 1,000 metres of that plant. This is Gilbey's footwall. So these loads were known of, I suppose, as essentially sporadic loads. They were seen as a high-grade opportunity. Every so often people would go and mine there, but I wanted to actually drill this area. It was sitting underneath a ramp at the time, which obviously with trucks running up and down it, you can't easily put a rig there, but we made the decision to take the trucks off there and actually put the rigs in and get a proper idea. We put out a number of sections the other day that showed that this is consistent, multiple loads and some pretty good grades there, as you can see in the red. And again, within existing infrastructure, essentially sits under one of our ramps, and we can get in there pretty easily. This is Yelgoo. That's an overall there. Essentially, we defined 200,000 ounces at 1.4, 1.5. That's why I was acquired at Firefly, but right now it's one of the assets that sits in the sort of 2 to 3 year horizon for our mining schedule. I'm pretty happy to say that because I think we can easily fill that mining schedule and keep going. And there has been very little exploration there. We defined over 130 workings that have never been followed up in that area in my time at Firefly, so we'll be pushing with our exploration strategy to get down and actually do some more work there as well. As I said, the next 12 months we're going to be focusing on these brownfields targets that we're defining. We're going to get that Gilbey's North area permitted. We're going to be potentially mining in that footwall area, which may justify a larger cutback, but obviously we've got to do the economics. But it's all pretty exciting given that the mill's right there and we're generating cash flow. So it's essentially just getting bigger. The life of mine's getting longer. This is Glenberg and Edgerton. So again, I talked about the other assets within the company. This is one of the sort of standouts for me. It's essentially the same size as what we're currently mining. There's no value put on it in our share price, but there's some spectacular hits in there. 8 metres at 11.6 and 8 metres at 11.4 from Edgerton. So there's some real potential to some of these more satellite projects. At the moment, we're focused on Dalgaranga and making sure that we get a sustainable mine life there and we continue to produce cash flow. These assets are just some upside to that. Key takeaways, gold producer, we are maintaining our guidance. We're not pulling back from that. We are going to do that, if not better. We have a modern low processing cost plant, and you won't build a plant like this in a hurry at the moment or cheaply. Emerging discovery pipeline, mine expansion potential at Gilbey's North, Plymouth and Gilbey's Footwall. We're active and we are successful in our drilling strategies. We're delivering outcomes. We're not just talking about it, we're actually getting it done. Targeted delivery of consistent 1 gram a tonne head grade. We make money, a lot of money at that sort of level, so we're going to continue to do that and push beyond that. And we're debt-free and unhedged. We have a fully engaged team, highly experienced, and we're just fully focused on trying to deliver outcomes for our shareholders. Thanks, Paul.
Great, thanks, Simon. Our next presentation is Austral Resources. Austral's a relative new